Let's talk about two myths regarding rich people. And I'm not here to defend rich people. They have plenty of money. They can defend themselves. But I am here to defend reality and just how the world works. And you'll see what I mean as I go into this video. But there is a new study out. And while I'm not going to refute the claims made in the study, I'll take them at face value. What this author of the article, what this study is trying to imply from all this is just not the real world. And it's, as I explain things, you're going to be like, Clay, why are you treating me like a child? And I understand, but this is what the media thinks. This is what these, people that do the studies, they don't think that, I guess, the common folk can connect these basic dots, but they are definitely myths, and I want to go down in each one. That way, if you ever come across somebody, you can talk with them in a respectful way and say, well, yeah, that's true, but I mean, what else would you expect to happen? And like I said, you'll see what I mean. So let's hop into this article and go through a couple of these points. So the article, the richest 1% of people amassed almost 2/3 of new wealth created in the last 2 years, Oxfam says. And then we come down here and they're going through all the studies. But the big one here was a billionaire gained roughly 1.7 million for every $1 of new global wealth earned by a person in the bottom 90%. And they continue on, but the big punchline here was that, there we go. It suggests that the pace at which wealth is being created has sped up as the world's richest 1% amassed around half of all new wealth over the past 10 years. Past 10 years. I'm going to say that again. Past 10 years. Quick little history lesson. What has happened over the past 10 years? There's been a whole lot of money printing, right? There's been a whole lot of stimulus checks. There's been a whole lot of money created out of thin air and then sent to people, right? That's happened multiple times over the past 10 years, specifically over the past couple of years, right? Where this whole study is really being focused on. They say past 10 years, which is fine. But if you want to just say the past few years, that's also fine. But if they want to say 10 years, so be it. A lot of money has been created. A lot of money has been handed out to people. I'm assuming you got a stimulus check in the mail. So let's just set that aside. And this is where I'm going to start to insult your intelligence. But I don't mean to, but this is what they don't think that we can connect. So a business, how do they make money? They offer what? A product. They offer a service. Now, are they allowed to say to you, you have to buy this service, you have to buy this product? No, they're not forcing anybody. So if they offer a product though that people want, or want more of, or want to try, any form of want, either want it, want to try, or want more of, and then people get more money, and this money just comes out of nowhere, is it plausible? Is it logical to say that, well, those people that offer products and services that people want are going to get that person's money that just came out of nowhere? Well, of course. What else would you expect to happen? That's why I don't understand this whole narrative of, wow, they've gotten wealthy even quicker. Wait, really? Really? People that offer products and services that people want or want to try or want more of, all of a sudden got money really quickly when a bunch of money was just really quickly created out of thin air and handed to people? Really? Wow, that's shocking. You needed to do some big study to figure that out? So do you see what I mean? So the big myth here, myth number one, is that this whole idea that somehow the rich and the wealthy are doing something evil and they're getting all this wealth, and the rate, the speed at which they're getting this wealth is even increased. Well, no kidding. There is nothing evil going on. That's just basic economics. That's basic supply and demand. If you have something that people demand, and I'll repeat myself one final time, that people either want to try, or want more of, then yes, and those people all of a sudden quickly get money out of nowhere, those people are going to quickly get that money. It's a free exchange, right? So when the next time, if anybody tries to they just keep getting rich. Well, how does a business, how does a person get rich? By offering a product and service. And yeah, when people get more money, of course, that person that's offering the product and service is going to get more money, and they're going to get money as quick as that money is created. I mean, think about it. How many people went out and bought TVs and this, that, and the other with those stimulus checks? I'm not saying you're right or wrong to have done that. I'm just saying that, I mean, it makes sense why this statistic would would exist. So I'm not quite sure why. Well, I mean, you know why they're trying to spin it in a certain way. But like I said, putting that aside, the reality of the matter is, well, yeah, that's just how economies work. And then from Business Insider, same Oxfam study calls for billionaire busting policies. Says the world's top 1% has been getting richer much faster than everyone else, which we've already covered. But here's what just, and this should get on your nerves too when you see this, because you can tell who they're preying on. So right here, most of the income of wealthy people are also unearned and are derived from returns on their assets, but it's taxed at an average of 18%. Just over half the average top tax range on wages and salaries. So half of that is being done on those unearned assets. So myth number 2 here, and your blood should be boiling. I assume that you trade. I assume that you invest, stocks, real estate, or whatever, but I'm assuming that you are an investor of some type. So you full well know that you are earning money when you go and get money from that money. How are you earning it? By taking a risk. There's no guarantee that you're going to make money. So this whole idea of, well, geez, it's only 18%, but yet salaries and wages, I mean, that's double what's being charged. Well, yes, because when you go to a job, you are not taking a risk. You are going to get a paycheck. If you don't get a paycheck, you can sue and make a whole lot more money. So there is no risk associated with going to a job. So yes, that salary, that wage will be taxed higher because there was no risk that you had to take. Not to mention this unearned profit, you already earned it in the first place and it was already taxed once, right? Think about it. You go to a job, you get a paycheck. That is taxed. Whatever you save, okay. You then go and use that money, you take a risk with it and make an investment. You then go and make money with that risk, which was, again, it's a risk because there's no guarantee that you're going to make money from that real estate deal or that stock or what have you. But let's say you do make money, so you do make good decisions. So that money has already been taxed once. So why would you, do you really want that money to be taxed at the same rate once again? Some people apparently yes, because they don't understand how any of this works. They don't understand, to just see that word, unearned, shows the flat, and this is on Business Insider. Who are these people? Who are they hiring to do these studies, to write these articles? Again, I realize I'm preaching to the choir because you watching this as an investor, you know that you've got to take that money and you've got to put it into something and you don't know if it's going to work out. There is a risk associated with that. So you are earning that money via the risk being taken in the first place. So when you go and see people make claims such as this, well, a lot of these people, they're not even earning it. They're just making it because their stocks are going up. That's confirmation bias. They are conveniently forgetting the fact that, well, yeah, they went up, but they could have gone down. Those people could have lost that money. So can those people have big tax write-offs then if they lose all that money? No, right? It's kind of, again, confirmation bias. So be sure and to explain that to people too, which you probably already realize, but that is myth number 2. To go out there and say, well, people got richer and they got richer because, and they didn't even earn the income. They're just making it on their physical assets. Explain to them the whole concept of risk and how there is never a guarantee that those investments would make money in the first place. So that's what I have for you. And I realize I raised my voice on that second one, but as somebody like I know you are that's in the trenches and you realize this concept of risk, to then have someone come at you and say, oh yeah, you're making money in unearned ways. It's like, and oh yeah, and what you make, it's taxed at lower rates. Oh, I know. I'm preaching to the choir. Again, how dumb does the media think we actually are? They think they either think we're really stupid or the people writing this stuff are ignorant and don't understand how economies and investing and risk works. But I got to end it. So like I said, those are 2 myths, very easily debunked, very easily explained when you look in the world of reality. But maybe this was just a venting video, but if you enjoyed, hit that like button, leave a comment below. Do you have any other pet peeves about this sort of stuff? I'd love to hear them down below. And misery loves company. Not really misery, but venting. I'm venting. If you want to vent alongside me, well then let's do it. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.